Okay, we're back. We're starting with number 14. If a partner contributes services on the formation of a partnership, how much income does the service partner recognize, if any? How much, if the partners contribute services on the formation of a partner, how much income does the service partner recognize, if any? And although I admitted afterwards that the problem, which came from the test bank of the textbook, it leaves a little bit desired because it should have said that the partner's getting a equity interest as opposed to just profit. But even if you read the textbook carefully, even of profits interest, the amount, if there is a fair market value to the profits interest, has to be recognized by a service partner. Usually the profits interest can be argued to be zero, but the textbook did go into that in some detail. Nevertheless, the principle is that an amount equal to the fair market value of the services rendered is what the partner has to recognize. So even if it's just a profits interest, if it has value of some nature, then it will be recognized to the tune of the fair market value. Okay, number 15. Roll contributes the following for 50% interest. What is Roll's basis in the partnership interest? All right, so let's see what we've got here. We've got building, we have the fair market value amounts, we've got the carryover tax basis. We want to know his basis in his partnership. What's his basis? So the basis referred to here is not book capital account. We don't call that basis. We're referring to the tax basis, and that number is 100,000. Answer C. This is almost a giveaway. You just had to know that basis means the tax basis. Okay, number 16. Carol and Jessica and Samantha form a partnership. Carol contributes the building, Jessica contributes that, and it shows what is Samantha is going to operate. She's a service partner, so she's contributing services. And here again, how much income should she report? This clearly should have said that it's the equity basis that she's getting 60% of. Clearly should have said that. I think it's just an assumption that the problem makes because it says partnership interest here. And so what we're interested now is what's the percentage of the fair market value, because that's what she's really getting. She's not. This is carryover basis, but her real value is the fair market value here. So 60% of 800,000 is going to turn out to be 480, and that's answer C. So she'll recognize that as income. Period. Ordinary income too. When a partner increases her share of partner's liabilities, the liability increases. And again, we've been already discussing this through this quiz. This is one of these ones which I thought it would be a no-brainer. Don't even have to think about it except for 10 seconds. And here's what you would have thought. Partner increases basis in partnership liabilities. That's like cash in. So the effect, the liability increase is like a money contribution. Answer B. Done. The guaranteed payment on number 18 is treated as a separately stated item. True. Ordinary expense. It is deducted. None of the above would not make sense here already. And here C combines A and B together. So answer C. See how fast that one went? Okay. Which I know you're saying, well, I'm the teacher. Of course it goes fast. But you could double the time or triple the time, and it still would have been not more than a minute to get the answer to this. Which of the following partnership items are not included in self-employment income calculation? All right. So let's see what we got here. Ordinary income, well, it could be included. So that's possibly SE tax. Section 179, which is like depreciation, that could have an effect on the self-employment income calculation. So it is included. and guaranteed payments for sure, well, not for sure, but they're very possibly included in the calculation, and so you can't ignore them. If they're guaranteed payments for services, you can't ignore that they'll be part of self-employment income. Gain on the sale of partnership property is just purely that, gain on investment, and that is never SE taxable. So that one was the easy one. And we're done with number 19. Let's look at number 20. Partner had the following items reported on the partnership schedule K1. Question is, we're looking for self-employment income for the year, and we use the word arguably here. That could be, we're just looking for the most likely result, even though we're not sure how it should come out. Let's look at the most likely result. So you got guaranteed payment, that for sure is included. Dividend income is not. Section 179 expense would be a deduction from income. So, and the income is 59, except for one thing. In this income is 1245 recapture, which is not from services. It's a recapture similar to a capital gain item like we had here. That's what it is. So in that case, we're saying it's not services. And so this amount of $5,000 in income would arguably not be part of self-employment income. So from the 59, we're going to subtract 5, because that was included in the income. So that gives us 54. We know that the guaranteed payment is included, but it is also deducted from the 54. Is it not? Isn't the 54 already deducted? And the answer is yeah. It's deducted. We got 26 is the section 179 expense. We know we have to take that off. I'm just getting confused because I know I'm going to have to do the math. So let's I'm going to do it by hand. So I'll come back and explain it. So that's 6 for 14, 2 for 100 is 28. And then if we deduct from the 54 here, the guaranteed payment, we're going to wind up adding it back because the guaranteed payment is probably included. So, so the answer is, if we deduct it from the 54, it was already deducted. I'm sorry. The guaranteed payment, in order to get the ordinary income, was already deducted. We don't have to deduct it again. It's already been deducted. It doesn't tell us anything that would lead us to think it's not deducted. So the 54 at this point here, after adjusting for the recapture here, is after the guaranteed payment is deducted. The section 179 has to be reduced from the 54 because that hasn't been deducted from the net income. That's the depreciation amount, not deducted at this point. Remember, it's separately stated. That's why we're doing it. Now, just like any other depreciation, but it was separately stated. Leaves us 28. We have to add the 9K from the guaranteed payment. That'll give us B. 37,000 is arguably subject to self-employment tax. Let's recap that one more time, because I sort of fumbled it along trying to think out the problem. 1245 recaptures included in the ordinary income. That means for sure, I don't know what I'm doing here, but there we go. Okay, so now I got a new color with B. That means for sure this $5,000 is not subject to self-employment tax because it's just recapture. So that we can take off of the 59. That gets us to the 54. The section 179 is separately stated depreciation, so to speak. So that has to come off the 54 as a expense, leaving us with 28. The guaranteed payment has already been deducted from the ordinary income, but and is separately stated, but the guaranteed payment itself arguably is going to be subject to SE tax if 37 becomes the right answer. That's number 20, and then we'll stop for that one.